Good evening and welcome to tonight's live webinar where we look at ASX investment opportunities in review for the 8th of June. Any individual reading or listening should discuss with their financial planner or advisor the merits of any recommendation or offer presented in this material for their own specific circumstances and realise that not all investments are appropriate for every individual. Investor Signals offers a broking account service which is based around our model portfolios covering the ASX 20, 50 and 100 as well as the US S&P 100. We also operate an ASX and US high conviction portfolio which picks up the themes expressed on the daily blog. We have a iShares International or Global ETF model, and within the broking account service we operate an independent portfolio where we can work in partnership with you to execute ideas or strategies that we jointly agree on. And we also have access to derivatives, running either covered calls or buying puts for protection. The covered calls are a great way to enhance the income from stocks that are moving sideways or sort of less volatile defensive assets. If you'd like to know more about the broking account service, please call me on 1300 614 002. The Investor Signals model portfolio, the Australian securities focused on the ASX 100, delivered 13% over a 5-year average, and financial year to date at -1%, and this is the data as of the end of May. The United States S&P 100 averaged 12.9% or 12.89% and 3.65 financial year to date, and we run that strategy through our subscription service, so you can subscribe to those model portfolios and have the email notifications when a stock's added or removed to the model. Please visit our website, and under the research area is where you'll get access to the technology or the Investor Signals member area, and that'll be the technology that I'll be presenting tonight, but it also includes those model portfolios. You can get a free trial by visiting the website, or if you're ready to sign up, it's $1,320. To inquire about a broking account, you can read more on the website there, and we also have a managed fund. The technology that I'm using tonight is the Investor Signals member area, $1,320 for the year. If you wish to establish a trial or you just like to discuss more about the service, please call 1300 614 002 or visit the website for more information. This is a table that we've looked at before. I think it's sobering to just stop and review this as the market continues to push higher. We're going to get to a point where a question needs to be answered, and that is, can corporate earnings match the inflated asset prices that are being created from the excessive liquidity that's being pumped into the market from the Federal Reserve? And there's a strong possibility that the answer to that is yes, given enough time. So by 2022, could earnings get back to where they started from, which was about $160? I think that's possible, but it's not without its challenges. So I think we're certainly looking at 2020 earnings being much less than they were in 2019. And if we go back to sort of where's fair value for the market, just as a backdrop for any analysis as we toggle through the stocks, I think it's just important to think, well, in 18 and 19, when earnings were $160, the S&P was worth 3,000 points. If we end up somewhere between, say, this 130 range, which is probably where 2020 earnings will be, well, that was 2,500 points. So it seems plausible that a good outcome for the market would be if we can stay within this earnings range from 2017 to 2019, which would put us more in a sideways consolidation range between maybe 2,500 and 3,000 near resistance. Now we're pushing above 3,000, almost 3,200 in the S&P 500. We're seeing a little bit of a rotation out of technology into industrial and financials. That were the sectors that were largely left behind from stage one of the market rebound, and maybe there's a limit to how far those industrial and financials can actually rebound in this economic environment. So that'll be something that we focus on as we go through tonight. The Nasdaq index pushing up against what may be potential resistance there. The technology sectors continue to remain a strong part of the market. As I said, more recently, just in the last few weeks, we've seen participation from the industrial and financial stocks. The index is still above the short-term moving average, so what we want to do is just keep an eye on when we see that momentum falter, and that'll be something that I'll highlight on the blog to you. But what we are seeing as a broad pattern across the ASX 100 shares is we're seeing a large number of companies now shift to sell signals, and they're being removed from the model portfolio. Something that I'll touch on at the end of tonight's recording is our trade table. This is a new feature that we have available in the technology. This looks at second and third sort of indicators for filtering those primary algorithm signals, and what it's saying out of the ASX 100, all these stocks are under long conditions, so algorithm buy conditions. All these are under short conditions, but the only one at the moment within the long side that's supported by a positive pivot point and also a positive short-term momentum indicator is Coles. On the short side of the market, we've got this group here, albeit I've highlighted a couple that I'm interested in, and I'm tracking to see how they trade in tomorrow's trading session. But I'll try to cover a little bit on the trade table towards the end of the recording. The graph up on screen is the Nasdaq, and if we just zoom in and have a closer look at this, so we can see here, whilst it had a small pullback, it closed back above the average, and we actually haven't had a close under the average for probably this day here, was the, albeit it only sat under there for a few points below on the close and then reversed the following day. But it's going back to say the 1st of May that we had a close below the moving average. So as this average hugs the rally up, we continue to give the market the benefit of the doubt on the upside, but we're becoming increasingly mindful that when the momentum falters, the selling pressure could pick up quickly. Tonight what we're going to do is go into the watch list. We're going to select the ASX 100, and we're going to organise these in stocks that are under buy conditions, and we're going to focus on those first. As I move through the list, we're going to then move into the stocks under sell conditions. As I said, there's been a big increase in the shift, so at the moment we've gone from roughly being, say, 70% invested, so that's a reference to out of the 100 stocks in the ASX 100 index. We were holding roughly sort of 70 stocks in the model, so meaning that 70% of the index was under buy conditions. Now we're seeing that swing around, we're less than 50%, and we're moving sort of closer to that 35% allocation. So what you'll notice tonight is there's fewer stocks in the buy, and for that reason I'll start to comment a bit more on the short side of the market. And if you are not running a short portfolio, maybe it's something just to make a point tonight of starting to take down some notes on 4 or 5 stocks that are potential candidates on the short side of the market. And if you'd like to talk to me tomorrow or during the week about how to take advantage of the short side of the market, then I'm happy to give you details on both the short side of equities or hedging portfolios with index futures or buying put options. There's a number of different strategies that I can talk to you about and walk you through how they work. Okay, on that note, let's kick things off with Ansell. That's the first stock on the buy side of the market. It switched from sell conditions into buy conditions. It's now pushing $35. We think that's getting a little bit expensive, and we'd want to see a bit more visibility around the upcoming earnings before forming a view on that. But the trend's bullish in Ansell and the next algorithm buy signal, so we're happy to buy into Ansell on a dip in the back half of this year. APA Group, we've liked this from a dividend standpoint and a low sort of risk proposition for portfolios, but it's back at full value. Don't see upside there. Afterpay expensive. We'll look at this on the next buy signal. So if we have a look at the history here, it was under buy conditions there at around 26. Not further buy signal earlier this or in March. and we're now pushing up to 50. If we see a pullback and another buy signal in the back half of this year, maybe around $35, happy to take a look at Afterpay. ASX, we like this business. It's expensive. We're probably not likely to see too much in the way of earnings growth for the rest of the year. The stock's trading up at 37 times earnings compared to a historical average of about 15 times earnings. The justification for that is obviously interest rates low. If earnings are just stable and moving sideways, you're getting a 2% dividend yield, and it's just a function of market chasing defensive income. But it's important to just step back and have a think about that PE valuation, 37 times earnings compared to the historical average at 14 or 15 times earnings. So it is reflective of how pockets of the market are starting to become expensive. Illumina, thinking that this could find support down here at around this 160 level, so looking for it to hold above the average. You'd want to run a stop loss on a break below 135, but willing to give that the benefit of the doubt to the upside. Bendigo, so out of the banks, our preference has been Macquarie, but still a bit cautious on the broader sector given the backdrop there on the index. But certainly if the Nasdaq broke below that average, then you might want to think about exiting any banking exposure for the short term. BHP, we're still bullish on the iron ore stocks. Iron ore's pushing up to $100 a ton. BHP Rio's our preference. Now that narrows given Rio's gone to algorithm sell signals, so our preference still remains BHP. And maybe there's a little more upside up to that $37.50, $38 level. But again, be cautious if you see that Nasdaq reverse lower. Beach Petroleum, preference Santos over Beach. Coles, we like this. We've seen Coles and Woolworths rally. This is one that I'd flagged on the blog that around $15 were buyers of it. Still looking for Coles to push a little bit higher. Interesting that Coles is still under buy, and then Woolworths has switched to sell signal at the end of last week after rallying from $35 to $37. That kind of fits with the broader research being published by most analysts, as they have a preference of Coles over Woolworths. So we'll just see whether Coles can hold this sort of $15.50 level and break back up to maybe $16.50 in the short term. CSL, we like this. We think sort of any impact to earnings or negative sentiment around this COVID impacted period is a buy on the dip opportunity for CSL. We've started buying into this on Friday, albeit that we have sort of a more conservative price target down at around 265. We're only going to see that reached if we see a few nights of selling in the US. So just think about how you want to manage the position size. But if we saw CSL down around this 265 level, not only buying the stock, we will look to buy call options to take advantage of sort of leveraging up that upside movement that we would forecast in CSL. So one way of tracking this is for closes above that moving average. Keep an eye on the shorter term momentum indicators down the bottom. You can see there the price range that I've flagged there, but certainly expect that sort of this sell-off in CSL produces an opportunity worth pursuing. Dexus, it's hard. I don't particularly get excited about the fundamental story here with Dexus. Maybe the stock's a little bit oversold. At 9.22 is roughly where that average is trading. You can stay long the stock as long as it sits above that moving average. Flight Centre, slight recovery underway. Risks are fairly high in the business. Again, from a momentum standpoint, you could sit on the long side of it as long as it sits above that moving average. Fortescue, iron ore is strong, and the price performance in Fortescue has been exceptional. Our preference still remains right at the moment, if we're wanting to hold one of these, it's still BHP over Fortescue. JB Hi-Fi, so it's under algorithm buy signals. If we look at the history there, it switched from sell conditions back in 2017 into buy conditions there at $22. It's one of the better performing stocks in the model portfolio, continuing to make higher highs and higher lows. From a sort of shorter term opportunity, we think that's getting a little bit expensive where it is at the moment. Newcrest, add this one to your list. As equities are moving higher during this risk on phase, meaning the market's comfortable to continue to add risk to portfolios, you're seeing gold pull back as you are the US dollar. There's a chance that that theme is starting to maybe run its course, and an opportunity will soon present to be long gold and long US dollar again. The range that I've marked here on Newcrest is a break below this sort of 28.50 level down into 27.50 would roughly be the midpoint within that channel, and that should provide a good buying opportunity for Newcrest. And the trigger for gold rallying higher may come later this month, or it may be more in early to mid-July as we start to see those June quarter earnings come through. But I do suspect that getting set in Newcrest over in the near term will be a good opportunity in the market. NIB Holdings, hard to get excited about the health insurers at the moment, but the technical pattern here is looking better than it has for a while. So I've just shuffled a support line up there at around 450, and if you're really looking for I think there's better opportunities in the market than NIB, but if you're looking for a developing momentum trade, you could consider that with a stop loss below the low there as indicated. Northern Star, preference Newcrest, but keep an eye on this, sub $13. There's a buying opportunity there, and I'll update you on the blog. Orica, given the strength in the mining industry, I'd expect Orica to perform well from around this $17 level, maybe pushing up to sort of $18.50, $19. So happy to continue to sit on the long side of Orica. Kiwi Insurance, not doing there at the moment. Ramsay Healthcare, I'd spoken about at $70, getting a little bit expensive. Fair value is probably more back at around $62. Don't see much in the way of earnings growth, so it should bump sideways around that 2.5% dividend yield level, which would capture that sort of $65 point. ResMed, add this to your watch list. It's pulled back from, say, $26 down to $23. It'd be nice to see it down at $22 as a buy zone. And a little like CSL, I think this sort of buy on the dip opportunity here in ResMed's one that you want to take advantage of. Sonic Healthcare, this has been one of our preferred recovery plays in the market, but at $28 it captures the full upside, so a little bit cautious. And one way of looking at this would be for a close below this moving average. I don't think it's I think there's more compelling short opportunities in the market, but if you're long CSL, you may want to start thinking about trimming the position size or taking profit. If you're looking to set up ideas in the coming months, as we see this pull back and maybe back down to $26, we'll see another algorithm buy signal, and you'd want to take advantage of that in the coming months. So a big part of the algorithm model is foreseeing maybe how these higher low structures, or in a bearish situation the lower high structure may unfold. So it starts to set up opportunities for you to think about in the months ahead. At the moment we're seeing a large number of sell signals in the market, but I'd expect around August, September, maybe even a little bit earlier, we'll start to see a shift back into algorithm buy signals, and some of these high quality names that pull back just because they're a little expensive at the moment, when we see that pullback and the algorithm buy signal, it's an opportunity to start to rebuild those names in your portfolio. So Sonic could be one of those buy on the dip in the latter part of this year. Santos, continue to like this from a momentum standpoint, but would get cautious on this as soon as the Nasdaq breaks below that moving average. Sydney Airports, I flagged this on the blog at the end of last week. The breakout trade to the upside here really is a momentum play on some normality returning to the economy, but I think both airlines and Sydney Airports are arguably going to be lagging behind, which is why they've been a late contributor to the rally in the market, but we're starting to see catch up in a number of names that have been left behind. Sydney Airports, maybe we can see it trade up towards $7 before it runs into short-term resistance. TPG Telecom, add this one to your list. A pullback to around $7.50 is a buy opportunity there in TPG. Westpac, As with all the banks, we're seeing a bit of a short covering rally and a push higher, but get a little bit cautious on what sort of the next wave of defaults and whether the economy can truly sort of pull itself out of some of these recessionary patterns that are beginning to develop. And is that an environment, if it doesn't, is that an environment that banks can grow earnings, especially with a backdrop of all the digital disruption that's occurring within the banking sector. A2 Milk not doing it there at the moment. So what you've now seen is we've gone out of stocks that are in buy conditions and we're now in stocks under sell conditions, and that's a reference to these algorithm markers at the top and the bottom. If the most recent signal was a green, or a green marker at the bottom, it would be a reference to the stock being under buy. Given this situation, the most recent signal's a sell. It's under algorithm sell signal. So what we'd expect to see is a trend of lower lows and lower highs, or negative momentum in the market. And we're certainly seeing that there in AGL. We had that sort of the lower high, I should say, at around that $21 level, continuing to trend lower, but maybe from a valuation standpoint we are getting closer to a level where AGL can find support, and it might be interesting in the second half of this year as to whether we see that switch into buy conditions. Caltex now under sell. So we're now looking at probably more than 70% of the ASX 100 index that's now under sell conditions, which includes Aristocrat. If you're looking for trades within these short signals, just use the reference as a moving average. Think about where the Nasdaq is. You're looking for a move below the average in the Nasdaq, and that would coincide with some of these stocks starting to break down through that shorter term momentum indicator. ALS under sell conditions. Altium. So here's an example of a technology stock that has already rolled over, so it's broken below that average. So if you're looking for a short opportunity in the market with a stop loss back above sort of that high there where it failed. Atlas again under sell conditions. Amcor, so we really like the Amcor fundamental business story, but just getting expensive up where it is at the moment, and again a break in that Nasdaq could be a trigger for some weakness there in Amcor. AMP just switched to sell conditions, so that was removed from the model during last week. ANZ's remains under sell conditions. AusNet's under sell. Horizon, comfortable that at $5 it's up against resistance. I don't think the downside risks are substantial for AZJ given that it's got good dividend support, but maybe we see it back down around $4.50. I think there's probably better shorting opportunities in the market. Boral's now under sell conditions, so this was a stock that we liked. We thought it was oversold here, and this was really a fundamental story of the government stepping in and providing stimulus to the housing market. We've now seen that happen, and Boral's rallied from $2 up to around $3.60. I think maybe $4 would capture the upside for this point in the recovery there for Boral. Bank of Queensland under resistance, still cautious on the regionals. BlueScope Steel, wouldn't be shorting BlueScope. I think sort of the momentum there's still a little bit further to the upside, and we could see that carry a little bit higher before it reverts. So actually I'll just jump back there. So here's an example where the stock's still strong. We think maybe it could push up to 13.50, and then we'll continue to watch that, but we'd want to see the price actually roll over and break down below that short-term average, but not looking to short BlueScope at the moment. Brambles up against resistance. This is just a valuation issue. Otherwise the business is in good shape and one of the few companies that's provided visibility around earnings growth, but from a shorter term momentum standpoint, we can see there that it's rolled over, it's closed below the average, so a little bit cautious. We're happy to take a look at Brambles if we saw it back at lower levels, maybe 10 to 10.50. Car sales, the great business, and we've participated in the recovery here from the lows, but it's now switched into sell conditions, and we're just watching this to see when it closes below the average. But I think just from a valuation standpoint, I concur that up around $17 there, it's starting to look a bit expensive. CBA's now switched to sell conditions, so given the strength in the banking sector on this rebound, there may be a few more dollars to the upside, but we still believe that it's a difficult environment for the banks to really grow earnings. So Not looking for that rally to really take out new highs. Coca-Cola now under sell conditions. We see this stock mainly moving sideways, but it's not one that we're too active in. Challenger not doing there at the moment. Charter Hall's under sell conditions. CIMIC, so we like this from a fundamental standpoint. Rarely do we sort of buy or hold too many stocks that are under sell conditions. CIMIC's maybe one of those exceptions, a little like Boral, where we were drawn towards that construction theme, and in the case of CIMIC, their exposure to infrastructure projects. So maybe CIMIC could trade up to around $30, we think. Cochlear now under sell conditions, so we've moved to a bearish position on Cochlear and cut our long exposure. So at around, I'd always highlighted that Cochlear was trading on a high PE multiple. Is a good business, but we're looking to buy back into that now at lower levels rather than continue to hold it. Computershare up at around $14 we think's expensive. Again, that might be an example of a stock on the short side that you make a note of. If we start to see that Nasdaq break below that moving average, you'd expect to see the same pattern here in Computershare. I think there's enough sort of structural headwinds for the business that if we see the Nasdaq roll over, the Computershare should outperform to the downside relative to some other stocks in the market. So if you're looking for shorting opportunities, keep an eye there on Computershare around $14 running into resistance. Crown again getting up to a level that is expensive. Cleanaway, so it had been under buy conditions, it's now switched to sell conditions. We were buyers of the stock at around 160. We started taking profit anywhere from $2 to $2 sort of 20 thereabouts. We still like the long-term fundamentals here for Cleanaway, but maybe where earnings are likely to be right at the moment, the stock's getting a little bit expensive. If we see a pullback in the coming months, we'd certainly be happy to buy back into Cleanaway. We think it's a good long-term thematic for investors in the Australian market. Domino's not doing there at present. Downer EDI, preference CIMIC really over Downer, so it's as simple as that. Evolution Mining, our preference is Newcrest. This has made a higher high here, so I'd expect on this sell-off over the coming days, weeks, that we'll see this switch into an algorithm buy signal, and we'll look at, and I'll highlight on the blog when we see that happen. But Evolution, once it's under buy signals, for the moment our preference is North Star and Newcrest, but we do like that gold theme on this sell-off that's occurring in within the sector. Goodman Group, our preferred property trust, has now switched to sell conditions. It was originally added into the algo model back here in 2018. It's rallied about 50% and it's now under sell conditions. So when we look at the fundamental story here, it was growing earnings about 6%, 6-8% per annum coming into this COVID period. We haven't seen a trading update from them. We know they operate in the high growth logistics space. There's low gearing levels at a company level, so we like the story here. Maybe it's just getting a bit expensive at just over a 2% dividend yield. Again, if we saw a pullback under a softer market environment, an opportunity to buy in at $13, Goodman Group's a stock that we like the long term thematic there as well. GPT, not doing too much there, but it is one of the better quality property trusts, and if you're looking to play a rebound in these names, you could maybe sort of shift that down there and just say, well, look, as long as it stays above that average, you're looking for a slight move higher. But I do highlight that the stock's still making sort of a lower lower low, lower high, and I probably wouldn't expect it to push much above 450. Insurance Australia Group now under sell conditions. We see this mainly moving sideways, so it's not sort of a high ranking stock on the short list at the moment. Iluka, resistance up there around $9. I wouldn't do anything until you saw it sort of break below that average. Incitec Pivot, again, sort of one of those rare examples where happy to look at the long side of this stock even though it's under sell conditions, just comforted by the $600 million capital raising they did, shoring up their balance sheet, run a stop loss below 190, but maybe the momentum can carry that a little bit higher short term. James Hardie up against resistance where it is there. Lendlease now under sell conditions, so resistance at around $13-14. Link not doing there at the moment. Magellan's now shifted to sell signals there with resistance at around $60. Mirvac under sell conditions, Medibank under sell. Macquarie now running in a resistance, sort of highlighted that had the potential to trade up to around that 120 level. We're there now, maybe 120, 122 starts to run in a resistance. So again, keep an eye on that Nasdaq indicator as a reference for that. NAB is now switched to sell conditions, and it's probably, if we're looking for a short in the banking space, ANZ, NAB, CBA all now are under sell signals. NEC under sell. Aurora not doing there. Origin Energy, this has been one of our preferred energy plays, but now starting to get into sort of where that price gap is. So on the upside there at 660, so if you're long the stock still, it's above the average. You could let it run a little bit longer, but maybe not too much more above that 660 level, which fills that price gap. Oil Search not doing there at the moment. Oz Minerals, I think this is one of the great stories in the Aussie market. So the rebound back to $10 puts it back up near resistance and under a sell signal. But again, if we see any market weakness in the coming months and we see Oz Minerals at lower levels, I'm a definite buyer of this on any pullback. So I think the theme for copper long term or over the coming years is attractive, and I think Oz Minerals expanded production we'll see new profits flow through to the bottom line from the added levels of production. Qantas now under sell signals, and obviously we'd like to see a bit more visibility as to how the earnings picture looks with Qantas. Cube at around $3 under sell signals. REA Group, so we really like that technology basket, but these are all now, so REA, Seek, Car, all are up against resistance and under sell signals. So our reference point there again becomes looking at that Nasdaq index, and we'd expect to see a similar pattern start to unfold. If the Nasdaq breaks below that average, you expect to see the same thing happen in REA and Car. If I had to sort of have a look at one of these and say which one's probably likely to have greater risk to the earnings, out of the four that we follow, which is obviously Xero, Seek, Car, and REA, I think Seek's the one that you'd probably put on your watch list there on the short side. So a break below that average, and maybe think about Seek on the short side. Rio, iron ore remains strong, so again it's not high on our list of opportunities on the short side of the market. We prefer to stay long iron ore through the exposure to BHP, which also gives us exposure to recovering energy price, but happy to start taking profit in some of these stocks that have been under buy conditions and now switching to sell. Reliance not doing there at the moment. South 32 not doing there. Scentre Group, these REITs have started to recover, and including the shopping centre REITs. So Seek, this is one that you could add to the watch list here. So if we start to see this sort of push a little bit higher and then falter below that average in line with the Nasdaq, that's something on the short side, and I'll keep you updated on the blog on that. Stockland maybe pushing back up towards around that 425 level and then running into resistance. Star Entertainment, I think maybe Star could trade 350, so only maybe another 20 cents more in it, but I think there's still question marks around what their earnings look like without international travel. So there's a couple here that just skimming through. Suncorp, keep an eye on this. If this could rally a little bit more, then I'd be looking at selling into that rally. I think Suncorp will have difficulties growing earnings over the next 12 months, 12 to 24 months. I don't think the recovery's particularly compelling there. Tabcorp not doing there at the moment. Transurban. It's up against resistance at $15 and a sell-off here in Transurban. Let's say over the coming months we were to see a pullback back down to maybe $13. It would certainly be a buy on the dip opportunity there. Telstra we see mainly moving sideways, but just highlight that it's now shifted to sell conditions. Treasury, interesting, just keeping an eye on this. It's obviously started to rally off these oversold levels, but not a stock we'd really focused on too much. In last week's recording I'd mentioned about Unibail Rodemco maybe being oversold and ready for a bit of a breakout move higher, and we saw it rally from $4 up to $5.50. So we'll continue to watch that. As long as it stays above the average, you could continue to sit on the long side of that. It was really out of the REITs. It was one of the ones that appeared sort of lower risk to me, given they're the large French conglomerate that took out the Westfield business. But hard to get too excited about the fundamentals for the real estate investment trust, in shopping centre space, in retail. Vicinity Centre not doing there at the moment. Wesfarmers, I think getting back up to a level that I would suspect is where it runs into resistance around this $42 level, but again just keep an eye on that to break below the average. So we're sort of still in this sort of strong bullish momentum at the moment, and you're waiting for that to sort of falter and see the price action close back below those averages. Worley, I think there's some issues here for Worley that may weigh on this stock, so this makes it onto the short list. So I think that's definitely one, and I'll revisit sort of what's on my list, and you can make some notes just at the end of the recording. So Woolworths, we're buyers of this at $34. It's now pushing up to $37. The sell signal happened on Friday. Maybe still looking for a little bit more out of it. It'll be interesting to see how it trades in tomorrow's session, but maybe at around $38 to $39. I think it would really sort of capture the upside, but we'll reassess that as we see how it trades in the early part of this week. Woodside Petroleum, preference Santos over Woodside, so not really interested in shorting Woodside either, so happy with the long side of Santos for the moment. WiseTech Global, so I think maybe this is a tech stock that you could start to have a think about. A break below that average, it's under sell conditions, it's making lower lows, lower highs, so it's and then Xero, so I wouldn't be on the short side of Xero. There we are, back to the index, Virgin Money, and then back to Ansell. So let's just recap what I think are the opportunities on the long side of the market. It's worth just having a look at the breakout that Sydney Airports is going through there at the moment. Orica, don't mind that given the backdrop of the mining industry continuing to remain strong. Woolworths, we just covered that, but we've been on the long side of this, and we're looking at taking profit, but maybe not in a rush to do that first thing on Tuesday. Newcrest Mining, so the gold sector, Newcrest North Star, keep an eye on a future algorithm signal in evolution, but Newcrest around that 27.50 would be, I think, a good buying opportunity and a good addition to portfolios coming into that June earnings period, which will kick off obviously that first week of July. What else we got here? CSL. So yes, in a soft market, if we get any selling in the US, you may see CSL back down at around 265. I think this is a good opportunity to accumulate on the dip. Obviously hard to sort of get the exact dollar value right as to where support's found. And therefore you maybe just manage your position size, but somewhere where we are at the moment, maybe 265, maybe there's risks on the downside in a more protracted sell-off in the US that we could see 250 in CSL, but I do suspect that longer term taking advantage of this dip in CSL should be well rewarded, as is the case with ResMed. So maybe down around that $22.50 level would be a target that you'd want to start having to think about, and I'll continue to update you on the blog. Obviously I'm tracking these and participating in the trades. TPG, so The merger with Vodafone looks like a compelling opportunity. The correction from say $8 back down to $7.50 would be the initial target, but it looks like it's wanting to sort of build new momentum with higher highs and higher lows there in TPG. So that one should come onto your list. Dexus I mentioned, but I won't. It's not one that I'm too active in. Illumina is kind of my high risk sort of position in the market. Stops back below 140, but if the mining industry continues to, or the mining stocks, resources stocks in general, remain buoyant, you could see a breakout in this back above that 170 high, maybe up to 190, at which point I'd probably look to take profit around that level. And Coles, we continue to like that. The setup there looks supportive. So on the short side of the market, let's just look at three for you to add to your watch list, which would be Seek. So again, keep an eye on this, tied in with the Nasdaq. When the Nasdaq breaks below the average, you could think about sort of a short position in Seek. Perpetual, I'll add this one, and I'll keep you updated on the blog there. Maybe is it around $33, $35. I think that starts to get a little bit expensive if we get a softer equity market. Altium, so technology play, so just flagging that it's under sell conditions, it's rolled over, broken below the average, so keep an eye on that one. And Cochlear was the other one that we looked at this evening. Now, where these have come from, as much as obviously toggling through the stocks, but the trade table, which is that new tool that I spoke about that we've developed. So let's just move through this quickly and then we'll finish up for tonight. So the ASX top 20, what we select the list, hit load, and we go, okay, what double arrows do we have on the long side and what double arrows do we have on the short side? So we've got no double arrows on the long, but on the short side we've got Goodman Group and Telstra, which what that means is it's under algorithm sell signals, it's under a negative pivot point, and the current close is below the short-term average. So if I was looking for short trades on Tuesday, that's where I'd focus my efforts, and this is updated every day, the trade table. So let's just move into the top 50 and see what changes there. So on the long side, we now got Coles that comes onto the radar. So it's under buy conditions, it's under positive pivot point, and it's closing above the moving average. On the short side of the market, we now got Cochlear, Goodman Group, and Telstra. So Cochlear has been added to that short list. And let's just move on to the ASX 100 and see what changes. So on the long side, still nothing's changed. We've only got the one double sort of bullish momentum indicators there, which is Coles, but on the short side we've now got an increasing list here. Altium we've already looked at, and as I move through these, Challenger, Cochlear on the short side I've discussed, Evolution I wouldn't be looking at, Goodman Group, good fundamentals, but Seek, I think that's one that you want to look at. So as I go back to that original slide in the presentation, the three that I had highlighted was ALU, Cochlear, and Seek. So maybe make a note of those, and you can track those in relation to the trade table. So the technology that I've used tonight, the charts, the watch list, the model portfolio area, access to the trade table. If you'd like to set up a free trial to it, or maybe you're on a trial and you're ready to become a full member for the year, $1,320, please contact me in the office. Thank you for listening in. If you'd like to know more about the software or a broking account, please don't hesitate to give me a call.